You've been told from everybody you need to be investing, but where do you start? What do you invest in? Hi, I'm Brittany with Brittany, Hannon Real Estate, and today we're going to talk about personal finance, specifically investing. I love talking about investing. It's one of my favorite topics just because I love talking about growing your money and making really good choices with it. Today, I'm going to give you a better understanding of what that means and where to get started. So we are going to jump right in right after you hit that like button, hit that subscribe button so you can get more content just like this. You want to invest 15% of your income into your retirement accounts. So if you're making $100,000, then $15,000 of that is going to go to retirement investing. The first place you do that is with your company match. And so if they match up to 3%, then you're going to want to put $3,000 into your 401k. Roth 401k is preferable if they have that option. Then the next step you're going to want to do is fully fund your Roth IRA. And the maximum for the Roth IRA is $6,000 in 2020. And so you're going to put $6,000 toward that. So now we're at $9,000. So you're going to come back and put the remaining $6,000 back into your Roth IRA. Now, obviously you don't have to go back and forth in doing these, but if you can figure out that math and be putting things, allocating it in that way, that is going to make it so that you get the most bang for your buck. The reason we do the Roth IRA over the 401k is because you have so many more options in the Roth IRA. You have about 1,000 options in the Roth IRA for your 401k's 12. And so you want to make sure that you're able to go and look at all of the options that you have and choose the ones with the best return. I invest in real estate and I invest in mutual funds. And the reason for that is because I understand it. And you don't need to have this vast knowledge of the stock market and the history of the market and penny stocks and day trading and all of these things to be able to go and figure out a good, solid investment strategy. So when we talk about investing, we want to break it down into a few simple steps. I personally invest only in mutual funds and real estate. I do that because I want to invest in things that I understand. You don't have to have a high financial degree to be able to understand mutual funds and real estate. Mutual funds are like buying into stocks, except it's mutually funded. So a large group of people get together and fund each of these different stocks. And so that's why it's called mutual funds. And of course, because you're only you can be one of those investors who's mutually investing in this with a bunch of different people. So that's the best way to go instead of doing single stocks. Now you can do single stocks just for fun if you really want to do that, but never invest more than 10% of your net worth in a single stock because that is what is going to get you into trouble. If that one company goes down, and we've seen, especially right now, that one company can go down pretty quickly and pretty easily, unfortunately. I personally follow the advice of Dave Ramsey, who says invest equally across 4 different types of mutual funds: growth, growth and income, aggressive growth, and international. We're going to break those 4 down for you right now. So we want to make sure that our funds are spread out and diversified. The easiest way to do this is to do it across those 4 types of mutual funds. So the first type of mutual fund is called growth and income. The growth and income stocks are those big, steady, boring mutual funds where you're going to go and invest in those and they're going to be pretty flat across the board. You're going to want these because this is going to keep it steady and this is going to keep things even for you. This is helping you to diversify. You want to make sure that you have some of these in your portfolio because as the stock market goes crazy like we're seeing, these pretty much stay pretty consistent. So you're not going to see tons of fluctuation on them when the market goes up, but you're also not going to see tons when the market goes down. So these sometimes are called the large cap. They're sometimes called blue chip funds. Growth stocks tend to follow the market more. So when you do see the markets go up and down, you're definitely going to see these stocks fluctuating as well. In the growth category, you will typically see some of the latest luxury item or things, more fun things in that as opposed to the growth and income. But that's also why you will see it fluctuate with the market. These are typically called mid-cap or equity funds. So the aggressive growth is just as it sounds. They aggressively come in and they shoot up, but sometimes they can shoot straight back down. They're typically smaller startup companies, so these are called the small cap funds. The international funds are just as they sound. They are not domestic funds, so they're overseas funds. Sometimes you'll see them called foreign funds, and you want to have your money outside of the US for diversifying your portfolio. So now you know the 4 different types of mutual funds. So when you go to purchase them, what specifically are you looking for? Well, in your mutual fund, you are looking for a long track record. 10 years or more is preferable. And you really want to see that they have a good steady growth over that time of about a 12% return. And some people say that's impossible, you're never going to find that, but take a look for yourself. You would be surprised to see what you are able to find. What I did when I first started my investment journey is I used my company's 403b plan, and I just transferred that over to use the same financial institution. So you can use Vanguard, you can use Fidelity, you can use any of those things. And you just want to make sure that when you're choosing, you choose them based on the criteria that we've talked about today. Well, I hope that helps get you started in mutual fund investing. Comment below to let me know what you're going to get started on today. Don't forget to like and subscribe, and we'll see you in the next video.